whenever I'm speaking on a particular insurance, right, the most amount of time that we are going to spend is on the why you should have this insurance, right? Once that why is clear, all the other questions start logically getting answered, right? Should I buy it, and should I buy it for my parents? Should I take one if I'm with a corporate? What are the if I already have one, do I need to really relook at it and shift it to others, etc. So all of those independent personal queries, right? In terms of what can I do, what's the best product for me, that will obviously at the end of the webinar will show you. There's a one-on-one session that you guys can book with our advisors, right? But today, we want to just trigger that need, and understand why a particular insurance is needed for us. And once insurance is done, we can move on to the investments eventually in life, right? Because that's the most basic foundation stone before you start investing anyway. Should we start, Dhruv? Or I think it's already 5:03, right?
Yes,
Five
Vatsal.
past.
We are
All
good to go. Awesome.
Sounds good. So, like I mentioned, right, insurance has almost become a necessity because, hey, without, making sure that our personal insurance is placed, it's not ideally safe or recommended to move on to the investments, right? Now, the three things that we want to cover today is, the entire hard truth about insurance, right? Why do we need one, what without insurance and what with insurance in our life, right? So once we know why, we'll know, among the 4 or 5 types of personal insurances out there, which one do we need and how much do we need, right? The four that we are going to speak today is on about of health insurance, your life insurance, critical illness insurance, and personal accident insurance. All these four items relates to your body, your life, your own personality, right? So you need health insurance to mitigate, some healthcare related costs. Similarly, life for something, critical illness for something, personal accident for something, right? So we'll discuss those. And then within each of that, what are the key considerations to decide which one to buy and which one not to buy, right? And along with that, how to select the right cover into it, right? Um, so, moving on, like I said, right, any kind of insurance we buy is to mitigate any kind of risk, right? And risk is unpredictable, right? We have seen cases where, not just celebrated cases, but, within our family or circle or extended circle, so you heard that he was just 45 and, something happened to this. He was just 30 and got detected with diabetes. He was just 35 and he or she got detected with cancer, right? So, life from that point of view is unpredictable, right? So insurance is to mitigate that risk of unpredictableness, affecting your finances. That tomorrow if there's a healthcare emergency, tomorrow there's a emergency, there's an untimely that may occur. Whatever hardships that are financial hardship that our family may have to face, we can overcome that by having some suitable insurances along with that, right? Um, so the role of insurance pretty simple. Sometimes it's required for legal compliance. For example, you buy a motor insurance to take care of, because if you don't buy it, the traffic police can catch hold of you, right? While no one really questions insuring their motor vehicles, people sometimes have questions or doubts, saying that is a health insurance or life insurance really necessary? So sometimes people value their cars more than their own selves, right? Well, there is no legal responsibility or legal liability to cover your own body. There's some tax benefit that comes along with it, right? Then there's financial protection, that whatever financial loss, in terms of expenditure or loss of income that may happen to us, can be overcome through insurance. Sometimes it is for asset protection. Our body is not really an asset, but there have been interesting, curious cases where celebrities and sports person have insured their body parts for a certain thing. So, for example, Ronaldo has insured his legs, right? If something happens to his legs, he gets $1 million payout, from the insurance company, right? So, all in all, the underlying theme is there is always a risk of something, and to manage that risk, to mitigate that risk, we have insurance, right? Now, the four personal insurances that we are going to speak today is health, life, critical, personal accident, right? So before we delve into it, let's just quickly understand each of it, right? Health insurance, as the name suggests, something happens to your health, you get paid. Now, mind you, this health insurance is an indemnification policy. What this means is that Imagine if tomorrow you were to get hospitalized and there's a hospital bill of 3 lakh. Whatever is your expenditure, right? The health insurance company will indemnify you against it. So even if you buy a 10 lakh cover, that doesn't mean you'll get 10 lakhs, you'll only get indemnified to the extent of the loss you have incurred. So any kind of hospital expenditure, healthcare expenditure that come gets covered to your health insurance, right? Which is why in health insurance we use the word sum insured, that hey, you are insured up to 10 lakhs. But when it comes to life insurance, right, we use the word sum assured. Why? Because you're assured a sum no matter what happens, how happens, right? The the moment you lose your life, you get that sum assured. So this is a lump sum payout. This is not an indemnification, right? No matter whether your family needed money or not, if something happens to you, your family gets paid the life insurance, right? So it's a protection against your life, that today, hey, you're alive, so you're earning. If God forbid tomorrow something were to happen to you, you will have a loss of income, and to mitigate that, right, we have this life insurance. Now, on top of that, there are two small other insurances: critical illness and personal accidental. Now, these can be independently bought. This can be bought along with the health insurance as a rider or an add-on. It can be bought with your life insurance also as a rider or an add-on, right? Now, as the name suggests, healthcare में समझो आपको डेंगू हो सकता है, blood pressure आ सकता है. These are all small things, right? But what if you get something like a cancer, tumor, heart attack, all those kind of critical illnesses, right? As the name suggests, what this does is critical illness will try to compensate you something higher in case you're meeting a illness of such a severity, right? And personal accidental, as the name suggests, if you yourself face an accident, there's some payout that comes to you, right? That's nothing but personal accidental insurance. So these are the four insurance that's related to your own self. We'll just talk in detail about each of them, right? As we go ahead, right? Starting with the life insurance first, right? I wanted to, and if you guys can, roll up a poll for that, right? Uh, how first, before we roll up the poll, and I want everyone to think that if something, God forbid, something happens to you today, right? Do you think your family can take care of themselves with the amount of assets you have? You can just drop a yes or no in the comment box. Uh, including whatever coverages you have, including what the assets you have. Do you think your family has enough money to sustain in case your life you're no more and that income goes away? I would like to see, comments, people who feel that, they have enough or they don't have enough assets for this. And I think we have a shy audience and, uh, uh, okay, Deepak says yes. All right. Now, along with this, if Dhruv, you guys can, roll up that poll, right? I would want to see, how many of the our audience member have a life insurance uh, today, right? Now, before someone answers it, let me just clarify the poll, right? So, if you don't have a life insurance policy, simply answer no. If you have a life insurance policy, but it's a pure risk term plan, मतलब मरने पे पैसा मिलेगा, मरे नहीं तो पैसा नहीं मिलेगा, pure risk term plan, right? 50 lakhs, 1 crore, 2 crore, those term plans, if you have, you try, select the second option. If you guys, have a policy, but those are traditional LIC types policy, endowment, money back, savings, ULIP, then you put on third. And if you have a combination of both, select the fourth option, right? I would like everyone to just finish up that poll, right? Dhruv, let me know when maximum people have answered it. So repeating, if you have a pure risk term insurance policy, then answer second. If you have a LIC kind of a policy, which is a 10-15 lakh sum assured, gives you some money back, some endowment, then select the third. All right. All right. So we have concluded the poll, and the poll says that 47% people don't have a life insurance at all. Only 11% have a term plan policy. That's why we are doing this, right? 31% have a traditional policy. So, when you look at your traditional policy, you realize the sum assureds are too low than what you require, right? We'll shortly come to that discussion how much term insurance policy we need, right? But that's 31% there, and 11% have both, right? So in combined, we can say 22% of the audience has both, has a term insurance, right? 11% have only term insurance, and 11% have term insurance and traditional both, right? So the remaining 80%, right, or remaining 78% either doesn't need a life insurance or needs one, but they don't know what to buy, right? So that the next part is entirely for the remaining 78%, as well as for the folks who already have a term plan. Let's understand whether no is it enough or not, right? Now, ideally, the need for life insurance, who needs to buy? People without dependents or people with dependents. Uh, the answer is second, right? If tomorrow, if something happens to you today and you don't have any dependents who are dependent on your income, we don't need a term insurance, right? Now, whether someone is a dependent or not is something that we'll discuss in the next slide. But anyone who has a dependent, right, like someone who is married, someone who has a parent who is retiring, do not have enough corpus, they ideally need to have a life insurance, right? So the answer is simple. If you have dependents, you definitely need a life insurance, right? But the next question becomes, how much should I buy and when should I buy, right? This is the two major questions we have to answer at the time of buying an insurance, right? Now, to discuss this, what I'll do is this will become like slightly technical. So, any questions you have, you can, just put it on chat right now. We'll do a Q&A at the end. But how much life insurance you need, right, is assessed using something called as a human life value calculator. That in case something were to happen to you, how much your human life is worth today, or how much corpus you need to leave behind for your family today, so that you know that your family can sustain the same kind of lifestyle in your absence, right? Now, to show this, what I'll do is I'll open up a spreadsheet at my end, which we can share it with you eventually if you need one. So imagine I've taken a random numbers and random case, right? So imagine today for me to work out this figure, right? How much term insurance I need to buy? I need to fill all the orange cells which are out there, right? So today I say that I have a depend. Say imagine I'm 32 years of age and my spouse is 30 years of age, and I'd say my spouse is dependent on me. So my youngest dependent is my spouse. I don't have a kid yet, etc. So I put my spouse as a 30. I say that my spouse is working right now. So, I put her retirement age at say 60 years of age. I can to pick this as 50, 60, whatever I want it, right? And I say whatever my spouse is earning today, right? She can continue to grow her income by at least 5% per year. You guys can take your own income. Everyone's spouse works in, everyone else will work in different industries. So you can take an income growth rate assumption to that field, right? Now, how does it affect your calculation? We'll shortly come to it. Now, today, when we first calculate our gross life insurance requirement, right? What would we want to do? We would want to do three things. One, we would want to make sure that in case something happens to me, any outstanding liabilities in my life gets knocked off in a single shot, right? So I say I have a 50 lakhs home loan outstanding. So if something happens to me, I need 50 lakhs to come so that that gets knocked off, right? And say I have a 7.5 lakh car loan outstanding. So I put 7.5 lakhs per year, right? So the total minimum insurance I need is 57.5 lakhs. On top of that, what I need is, I say that, in today's terms, my family spends 10 lakhs per year into essential expenses, 5 lakhs per year into discretionary expense, and include everything over here, right? Your vacations, your outdoor dining, your education expenses, anything out here, yeah? Anything except your EMIs, you have to put it over here. Why no EMIs? Because if something happens to you and you get 50 lakhs, EMIs will be no more, right? Because you've already knocked off the entire liability. So any essential expenses that you think your dependents will have, just knock it off, right? So here I have taken 10 and 5 lakhs. So basically I'm taking 15 lakhs a year of expenses that my 30-year-old spouse will have to take care until the end of her life, right? Which in the model, the life expectancy is assumed to be at 85 years of age, right? So imagine if I have to come out with a figure that I have to leave behind X amount of corpus, such that if that corpus keeps growing at say 7.5% every year, you guys can take your own assumptions over here. We take 7.5 year percent because something will be in equity, something will be in fixed income, post tax basis pay. 7.5% should be doable for your dependents, right? Now, this 10 lakhs is as of today, right? But we need this 10 lakhs for the rest of their life until they die, right? So we have to take an inflation estimate also. Say that what is 10 lakhs today, we'll need 10 lakhs 50 tomorrow, we'll need 11 lakhs tomorrow, we'll need 11.5 lakhs tomorrow, etc. Right? So if you see the moment I increase inflation, this estimate will increase, right? Because then I need more money. If I reduce inflation, this will reduce, right? That's how it happens. Now, on top of that, if I have any one-time independent goals, right? So imagine if someone is unmarried and he has a goal of marrying in 3 years down the line, he need not put it over here because a marriage goal exists only as long as that guy exists, right? If the guy is no more, the marriage goal is also no more. So all the goals which are independent of your existence, right, you have to put it here. So imagine if I say that although I have a house, if I sell my current house and I go to my dream house, I'll have to spend another 1.5 crores. All right, so I can put another 1.5 crore here and it will just get added. So all the one-time goals that you have in today's terms, you just add it up over here, right? So this 6.75 crore here is my gross requirement of life insurance. When I say 57 lakhs is to knock off liabilities, 1.5 crore is to take care of additional goals, and another uh, say 4.68 crores so that my family can keep spending 15 lakhs inflation adjusted for the rest of their lives, right? But this is the gross requirement. I really don't need this much life insurance. So what are the three components that I subtract from it? Okay. I subtract any existing life insurance coverage that I have. So I say that I already have a 1 crore term plan, so I'm subtracting it from here. Right. Second, I say that my spouse today earns 5 lakhs a year. And because her income keeps growing at 10%, until she turns 50 years of age, right? She will herself earn 2.86 crores. But mind you, what the 30 lakhs that she will earn, say, 20 years from now, would not be worth the same today, right? Today, that 30 lakhs would be, today, the money depreciates with time, right? Because of inflation out there. So today, the entire 2.86 that you're going to earn over the next 20 years, your spouse is going to earn over the next 20 years, उसका आज present value terms में the amount is only 1.53 crores. So what do I say? That even if I am not there, मेरी wife आज के terms में 1.53 crores तो खुद ही कमा लेगी, right? Now if you change estimates over here, this will keep changing, saying that if I make this 5 lakh rupees, 10 lakh rupees, or say 7.5 lakh rupees, this will increase to accordingly. So to each its own number, you just have to put it over here, right? And people can say that no, no, my wife's income will grow only at 7%, and you can change it over here, and this will accordingly keep changing, right? And the last, you would have already saved some assets so far, right? So if someone has say 50 lakhs, 5 lakhs in bank balance, say 40 lakhs in mutual funds. So to that extent, you don't need a term insurance because hey, you have already 45 lakhs to leave for your family, right? So this is your net requirement where you said that your final net requirement is you need another 3.5 crores of life insurance so that even if something were to happen to you today, your family can knock off the home loans. Your family can keep spending 15 lakhs a year. Your family can keep still buy that upgraded house that you guys planned for, right? Even if your income goes away, they will be able to take care of whatever goals they are set out, right? Uh, yeah, perfect. This is good. I'll open up this for Q&A in the later stage. So we just understood how much human life value we need, right? So this is nothing but assess your human life value, calculate the gross requirement, liabilities plus one-time expense plus recurring expense corpus, and then you subtract existing cover, present value of all the future income that she is going to earn or the other spouse is going to earn, and all your existing assets so far, right? Now, when should you buy? So you should buy ideally when your HLV is positive. Imagine in that calculation, if I say I also earn 40 lakhs, my spouse also earns 40 lakhs. Even if something happens to you, my spouse will be able to take care of herself. In that case, the HLV human life value will automatically come as negative. In that case, ideally, you don't need. Having said that, I still suggest that जितना भी liability का, even if your human life value is negative, right? Take to the extent of your liabilities. The reason for this is whatever high income your spouse would be on, right? The income will be realized over the next 20, 30 years. But in the short run, it may become difficult for him or her to take care of the liabilities, right? So it's always better that the liabilities part is always minimum insured, right? Which is why banks also try to sell you a credit linked life insurance policy along with your home loans and etc. Right? Having said that, credit-linked life insurance are too expensive. You should definitely consider a retail term plan, which is like 3 times cheaper than a credit-linked life insurance policy that the banker tries to sell you, right? Second, you have to take it when your medical underwriting is good, your health is good, right? So, for example, I'll tell you, 70% of the diabetic people who try to apply for a term life insurance, they get rejected. The remaining 30% who get accepted, they have to pay at least 50 to 80% higher premiums than a normal regular fit and fine person. So if diabetes runs in your family or you think you have a sweet tooth, you're ideally likely to get diabetes in your early 35s, 40s, etc. Have the term insurance when you're fit and fine, right? So that you don't have to pay a higher premium tomorrow. My bad, sorry. The I was on it. So the next part was on the income underwriting bit, right? Where we say that when your income is at peak, right? This is the time you should buy your your term insurance, right? Now the reason for this is that the life insurance have income underwriting metrics. So imagine if there are two people, one is 30-year-old and one is 60-year-old. Now both of them earn 10 lakhs rupees per year. All right. The insurer will say that someone who is 30-year-old earning 10 lakhs, you can be insured up to 25x your income, which is up to 2.5 crore. But say someone who is 60 years of age, right, and earning 10 lakhs, he or she can buy only 5 lakh. He or she
Hi,
can only buy.
Vatsal.
Yeah.
Vatsal, if you could just, I think people in the chat are saying that you're on mute. Um,
Is it?
I can hear you.
Hello. I was on mute like 10 seconds back.
Okay,
Not.
I think you should be able to hear.
Oh, yeah, yeah. So after I was, yeah. Anyway, so people who is people who are like 60 years old, right? They can only buy 5x their income. Now the reason for this is they have lesser income and lesser number of active income years to insure themselves, right? Similarly, if say someone who is 30-year-old earning 10 lakhs goes to the insurer and say कि मेरे को 15 crore का life insurance चाहिए, he or she will get rejected by the insurer saying that if you're earning 10 lakh rupees and you're going and applying for a 15 crore term plan, there is something fishy, right? Why would a someone earning 10 lakhs apply for a 15 crore term plan? The reason is, he or she may know that he's about to die or, some illness is trigger or something like that, right? So, insurer will only allow you to buy a particular multiple of your income levels as a total life coverage. So, someone who is in their early 30s and their incomes have already grown, they are at the peak, right? That is the best time to buy your locking your life insurance because you can, until 35 years of age, you can buy 25x your income as your life insurance coverage. After that, your coverage limits keeps getting reduces, right? But it changes from person to person. So yeah, those were the thing, right? What's your life's worth? We'll share a human life value calculator link, or I think they already shared one, right? But you guys can calculate your own human life value through that sheet, right? Now, what else should I consider before buying a life insurance? Simple, right? I have to decide what maturity age do I select. Now, like we said, life insurance to mitigate loss of income risk, right? Now, if I was planning to get retired by 50 or planning to get retired by 60, I don't have a loss of income risk after 60. So the conventional wisdom says is what is your retirement age should be your life insurance maturity age. If I'm 30 today, I buy a coverage which insures me until 60 years of age. Anything happens to me until 60, the insurer pays me, right? Second question is should I take for a limited pay or a regular pay? So imagine a 30-year-old today is buying a coverage until 65 years of age. So he has 35 years of policy term. Now, should I pay the entire premiums in a single shot over the next 10 years, or should I keep paying regularly over the next 35 years? That's the question. Financially speaking, regular pay is the best. But emotionally speaking, it also makes sense to take limited pay at times. The reason for that is simple. Imagine if you're 30 today, and you say that I can afford to pay 30,000 rupees of regular pay premiums for life. But what if at the age of 42, 43, some emergency comes to your life, and in that emergency, paying your life insurance premium is not your immediate priority, saying that I have to take care of food on the table, etc., all those kind of things, right? So many people try to get their first for 1 crore or 2 crore coverage locked in limited pay so that they know that after 5-10 years, even if something happens to them, even if they are not able to pay premiums, 1 or 2 crores of coverage is secure for life, right? And third is choice of insurer, which depends on claim settlement ratios, which parentage they belong to. So each life insurance need to maintain a certain particular level of solvency ratio, right? So if we speak of ICICI Prudential, Kotak, Bajaj, etc., right? They have huge companies sitting on top of their parents like HDFC Bank, ICICI Bank, who can fund the life insurance should there be a loss, right? So it's important to choose a life insurer who is going to be there for you for next 30, 40 years, because you cannot change a life insurance once you've bought one, right? So you have to stick with them. Uh, but yeah, that's all on the life insurance. Some commonly asked question is, if I have a corporate life cover, if my corporate already covers me in life insurance, should I buy one? The answer is still yes. Why? Because very less corporates in the first place give you that cover. Second, if you move your corporate from one corporate to second corporate, it's not necessary that second corporate has, so that could lead to a potential discontinuation. And third, the amount is not always enough because it's linked to your certain multiple of CTC, which may or may not match with your human life value that you have calculated, right? So the best advice is to consider your corporate life as a sweetener, right? Like अगर कुछ हो गया और corporate को आया तो it's an added bonus, but it's not ideally enough to take care of your requirement, right? But yeah, that was all on the uh, life insurance, right? Moving on to the health insurance, right? Before we go there, right? Guys, can you load up a poll on? I would like to know, what do our audience over here thinks? What is the cost of a particular treatment out there? If you, so everyone, I want to answer from the point of view that imagine you are living in a metro city, you are going to a tier one hospital like a Fortis, like an Apollo, or etc., like a Ambani, and let me know what do you think would be the cost of a liver transplant, kidney transplant, and stroke transplant. People are putting it on the chats. You can, just mention. Yeah, I think these guys have opened up a poll, right? Uh, Tier one hospital, metro cities. Just put up the right. I think we'll keep the poll open for 20 seconds each. For liver transplant, kidney transplant, and stroke transplant. Team, can we conclude the poll for this one? Yeah, so 41% suggested about 20 lakhs, right? So yeah, the ideal cost is around 20 to 25 lakhs in a metro city for liver transplant. Can we move on to the next poll? We'll keep it live for 20-30 seconds, right? We would like people to just answer it quickly. Right. Can you conclude one? Okay. Yeah, so the answer is 10 to 20 lakhs for this. I think people became uh about 20 lakhs ज़्यादा आ गए इसमें. Anyway, and moving on to the third one. So this is a heart stroke. Yeah, let's conclude this. Okay, so 5 to 10 lakhs. So this is the, so 46% people answer 5 to 10 lakhs, which is correct. So this right now, uh, can anyone guess the medical inflation rate in India? Like you'll have to drop it in comment sections. Like I'll wait for the first two, three comments. At what rate the healthcare cost is increasing in India? Can anyone drop it in comments? What is the medical inflation rate? 14, 14, 14, 10, 7, 12. Okay. All right. The medical inflation is actually 14. Yeah. So, two things, right? Not just, India is a doctor deficient country, but India is a medical tourism hub as well, right? So there's always demand for good treatment in India from that point of view. So, by the way, if you guys, if you, put compounding to it, right? If something is growing at 14%, that would mean every 5 years the cost will double. So whatever cost we are seeing over here, if you put the medical inflation rate to it, every 5 years, right? This cost is likely to double. So now probably you will know, why we need to have a health insurance in place, right? So when we're speaking on health insurance, right, there typically yes, India has the highest, like I said, right? Most countries are, so whenever a country is a good market for medical tourism, right? It automatically, becomes a higher medical inflation like country from that point of view. So people don't go to like there's a lot of patients who come from Africa, Europe, etc. to India to, get them treated. So yeah, that's the thing. Enjoy. Moving on to how much should I buy? So the ideal answer to this is, everyone should, at least take care of today's things. A 10 lakh cover is good to go. What ends up happening when you will eventually learn about retail health insurance is, right? There are no claim bonus, there are registration benefits, which what it leads to is your 10 lakh cover can easily go to 20, 30 lakh because of certain benefits that you have, right? On top of that, you will have some 5, 6 lakhs from your corporate cover, from your spouse's corporate cover, etc., etc. And that's how, 10 lakhs is enough for today, right? But like I said, 10 lakhs is enough for today. What about if we need it tomorrow, right? So every 5, 7 years, you should ideally assess and take a higher coverage, which, at the end of every 5, 6 years, saying that now I should make my 10 lakhs, 20 lakhs. Now I should make like 20 lakhs, 40 lakhs, 50 lakh, etc. Everything. Second, the question that we get asked, right? The health insurance premium when a youngster is buying, say someone is 20 to 30 years of age, it costs, say, 15, 20, 25,000, right? But the moment you go and buy for someone who is 55, 60, 65 years of age, it starts costing 50,000, 60,000, 70,000. So sometimes people ask us, right, ki, should we buy it for our parents as well? Given that, if I were to pay 10, 15 lakhs in insurance premium over the next 10 years for my parents, would it make sense rather than paying premiums? I take care of the cost myself. The answer to that typically is yes, for the reason saying that what ends up happening, and this we've seen live, right, where we have had clients who say that पेरेंट्स का नहीं लेते इतना महंगा है तो and then eventually when the claim actually comes, when a hospitalization actually comes, right, there are all these moral questions that's coming to you, that should we take a twin sharing room, should we take a, single private room, should we go for a robotic surgery or should we go for a non-robotic surgery. Now at that time, right, if things are covered by insurance, you typically have a higher peace of mind saying that ki, why not go for the best treatment, because anyway insurer is covering for it, right? So it's easy to mathematically think of it saying that कि अगर 10 साल में एक बार खर्च आया तो उससे चलो मैं जेब से ही भर दूंगा, I'll pay it out of my own pocket, right? But what if, at that time you have to make choices on different type of treatment, right? Along with that, the next question that also comes up is, what if there's a chronic treatment, right? Say something like a cancer, you have to go for repeat hospitalizations, repeat chemotherapies, right? So if something comes as a chronic expenditure, right, then all the entire maths will also go for a toss, because you're not paying it once in a lifetime, you're paying it almost every year, right? Every time you go for a sitting, you have to pay 1 lakh, 2 lakh, etc., etc. So that's the another point in, looking to buy a health insurance for parents. And the third question being, do I need a retail insurance when I have a corporate cover already, right? So A, your corporate cover may not be enough. Second, your corporate covers are not lifelong renewable. So someday in your life, right, you'll either switch to retirement or you'll switch to self-employment, right? Now, at that point in time, you'll have to go and buy a retail insurance. Now, what does IRDA, the regulator of insurance, does for us is, the insurance regular says that the moment someone buys a retail insurance, right, you're covered lifelong. In the sense, अगर आज आपने retail health insurance लिया and एक साल बाद आपको कैंसर डिटेक्ट होता है, द इंश्योरर कैन नॉट रिजेक्ट यू ऑन रिन्यूअल. ठीक है. नाइदर योर कॉर्पोरेट विल रिमूव यू आउट ऑफ योर इंश्योरेंस, बट से बिकॉज you are detected with cancer, you leave your job to focus on treatment, but at that time for the treatment, now you have to pay for it out of your own pocket. Why? Because you don't have a retail health insurance. Now the regulator says the moment someone is covered, you have to give them coverage for the lifetime, right? So what does the insurer does is medical underwriting before they insure you for the first time. So if at the time of buying insurance, if you're fit and fine, nothing like it, you will get a cover. But if you have developed some chronic illnesses, say like a cholesterol, diabetes, blood pressure, etc., you will not only be subjected to some waiting period of 2, 3 years, you will also have to pay 20, 30% extra premiums. Say you have some more serious things where say you had a non-cancerous tumor or you have early symptoms of early symptoms of autoimmune diseases or something like that, right? The insurer will either permanently reject you or they'll say ki will not cover autoimmune related and related complications for life. So in that case, you will not have a cover for the rest of your life. Why? Because you did not buy it when you are fit and fine. So ideal time to buy it is when you are fit and fine, so that everything is covered without any kind of waiting period attached to it, right? So that's what we need to ensure. Secondly, there is a clause which goes out there by the IRDA where it says that once you buy a retail health insurance and it is 6 years old, the insurer cannot reject your claim no matter what, because in 6 years is a cooling period after which even if you forgot to disclose something, it's fine. Not that you have to particularly deliberately misdisclose, but even if it is not disclosed, your claims cannot be rejected by health. So it's important that we pass on all this cooling period when we are young, when we are fit, when we are unlikely to claim anything, right? So that's why having a retail insurance alongside your corporate makes a lot of sense, right? Next, important considerations while buying a health insurance, right? One is, the one of the most important term in your health insurance is checking out the room rent conditions. So sometimes there is a capping of 5,000 or 1% of sum assureds. Sometimes there's a category restriction कि आप twin sharing ही ले सकते हो, and sometimes there is a no capping, no category restriction. So the ideal plans are with no capping, no category restriction, so that you avoid hefty pay. Just to give you a hint, imagine if your policy allows you to buy a room of 5,000 per day and you take a room with 10,000 per day, that would mean only 50% of your entire hospital bill will be settled. So it's important that you take hospitalization within the room rent category that you have, right? Second, many insurance plans, especially the PSC ones, right? The New India, One Intel, United, etc. They have a lot of disease cappings attached to them. Even Star Health, for that matter, has a lot of disease capping attached to them. So what ends up happening is that even though you may buy a 10 lakh cover, a robotic surgery will get covered only up to 1 lakh rupees. A cataract will get covered only up to 30,000. So I ideally prefer plans without any disease capping. Now, if you already hold a subordinate plan, suboptimal plan, what you guys can do is you can port this insurance from your existing plan to a new plan 2 months before your plan is subject to for a renewal, right? So that's called portability, in which what will happen, any existing disease or any existing condition, the waiting period of that will be waived off in the new plan. And ideally you're supposed to buy it as early when you're fit and fine. Now the question always comes, right? We all like to speculate, right? If I'm like Gopal Krishnan in the chat box, right? So I'm 30 today. If I plan to buy it at 35, is there any issue? I'm saying there's no issue even if you buy it at 40, but just make sure that you're fit from 30 to from the age of 30 to 40, right? If you buy at the age of 35 and you encounter any illnesses, right? Either you'll not get one or you'll have to get one with some extra loadings for the rest of your life, right? As simple as that. So whether to delay and whether you're speculating that even 5 years down the line, I will not have anything, which is why I can delay that decision by 5 years, right? But yeah, that's it. That's about it, right? Now moving on to this final two coverages, right? And these are typically sold as riders along with everything, right? So one is a critical illness insurance. So critical illness, like it's the name says, right? The moment you get detected with a critical illness, you will get a coverage out of it, right? So these are typically lump sum payout policies. Now, what is the intention of having this? So imagine I get detected with cancer. Now I already have a health insurance, so मेरा healthcare expenditure is taken care of. But the moment I had cancer, मैंने घर पे एक फुल टाइम नर्स रख दिया, एक कैरेटेकर रख दिया, मैंने 6 महीने के लिए जॉब छोड़ दिया. So who will take care of my household expense? Who will take care of my nursing costs? Because those things are not covered by my health insurance, right? Health insurance is covered only for the hospital expenditure, doctor fees, medicine, all those kind of things. So which is why critical illness health care in those extra expensive illnesses, right? These cover help you to particularly with peace of mind focus on your job, on your recovery rather than trying to make ends meet at the same time, right? Typically, we suggest that you buy a critical insurance. If you buy one, you buy it for anywhere between 6 months to 24 months of your expenses. The reason for it is simple, right? Most critical illness, bluntly speaking, either you recover in like 1.5 to 2 years, or you succumb to it, right? So typically, that's the age we are looking for. If we succumb to the critical illness, we have a term insurance waiting for our family. If we survive it, we rejoin and we resume with our income earning days, right? So that's how critical illnesses are, considered. You can buy it as a standalone policy from a health insurer. You can buy it as a rider with a health insurance, and you can also buy it as a rider with term insurance, right? Both are possible. All three are possible. Similarly, personal accident insurance, accident हुआ तो कुछ payout मिलेगा, right? As the name suggests. Now, within that, there are two kinds. One is personal accidental death, and second is personal accidental disability. That, as the name suggests, in case I die due to an accident, imagine I live in Mumbai, I use local train every day. If I fall out of the train, I die, I'll get the coverage, right? Now, ideally, we suggest don't buy personal accident at, at all. These are very cheaply priced, very cheaply priced, which is why many times agents try के आप अपना 2 करोड़ का कवर 4 करोड़ कर लोगे, बस 2,000 रुपये एक्स्ट्रा देना पड़ेगा. बट there is no value to it, in my opinion, for the reason saying whether you die by an accident or you die through an illness or you die naturally, right? Your family will need the same money in your absence. So this cover itself is not required. I would rather buy a health insurance or something else, or a critical insurance, which will help me when I am alive rather than after I am alive, right? So jitna bhi upon your death you need it, buy it as a term plan only. You don't need a personal accident. That is what we suggest, right? Then comes personal accident disability, saying that accident hua and you become disabled. Now this is slightly tricky, right? Where what ends up happening is ki, you know, you could be temporarily disabled also, you could be permanently disabled also. So say within permanent disabled, you are total disabled. Now this total disabled is like defined in the policies where अगर समझो if both your hands are gone away or both your legs are gone away or one hand leg is gone or two eyes are gone, you're called permanently disabled, permanently totally disabled, right? But what if only one thumb is gone, or say one hand is gone? If one hand is gone, you are called 25% disabled. If one thumb is gone, you are all 5% disabled. So there are limits attached to it, right? There's a whole percentage schedule to it. Now, imagine if you buy a 50 lakh personal accident disability, just for the sake of example, right? And you get totally disabled, you will get 50 lakhs in your lifetime only. So that after you have become permanently disabled, this money will take care of you for the next few years, right? And if you become partially disabled, then it will give you, say, 25% of that 50 lakh amount, right? Now the second scenario to this is कि you are totally disabled, but you are temporarily. तो imagine आपके दोनों हाथ चले गए, but it's not an amputee, it's just fractured. तो fractured है तो आप दोनों हाथ fractured है तो 6 महीने के लिए you're out of action, you're not able to work. Your employer said you can take an unpaid leave, right? So in that case, what this policy will do, it will not give you any fixed amount. It will give you a weekly allowance of say 10,000 per week, 20,000 per week to take care of your expenses. So until you get back on your income, right? It will keep paying you some allowances for that matter. So we suggest personal accident disability is a better choice than personal accident death. But having said it, to each its own, we don't compulsorily ask someone to buy a critical or a personal accident because some families may have 1 2 years of emergencies to take care of these things. Some families would be like, I do not have a lot of accident, like I don't do adventures, I don't travel by public transports. I'm unlikely that I'll face any of these things, right? But yeah, I hope everyone is clear with what each insurer does, right? Now, the last, like Jack Ma says, probably is trying to sell insurance too, but it says that he says that if you buy insurance your life or life, like if you buy 20, if you spend 50 on a year on insurance, your lifestyle is not going to change. But if an illness comes and it wipes off your savings, your lifestyle will change, right? So buying insurance is, so you'll not turn bankrupt because of buying insurance, but if you don't buy, you may cause your loved ones to turn bankrupt, right? Is what they are trying to say, right? But probably he was also trying to sell insurance, right? Um, I have an additional point to it, right? When I say that, consider insurance as a noble cause, right? So what ends up happening is that imagine if you pay a 20,000 rupees towards your health insurance premium and tomorrow you get detected with cancer where you're using it for say 5 lakhs rupees a year every year. Now you know that the maths works out for you, right? 20,000 पे करता हूँ 5 लाख का कवरेज मिलता है 20,000 पे करता हूँ फिर 5 लाख रुपीज बिल सेटल हो जाता है राइट सो फॉर यू इट ऑलवेज मेक सेंस राइट but for someone else who is not paying, not claiming, he may think that, my premiums are all going to waste. But the entire premium that you pay is not the profit of the insurer. Out of the, if 100 rupees is paid at a premium, 80 rupees goes into someone else's claim settlement, right? It is helping some other family member with a lump sum life insurance coverage. It is helping some other family with a health insurance, right? To imagine it as a way of doing an organized charity, organized donation, where insurer happens to keep 10-15% as a cut in between as a profit margin in between. But remember your premiums are never going waste, right? It's taking care of some or the other person out there, right? And the person who is the company is organizing all this, they make some profit margin to live out of it, right? But don't think when your premiums, no one wants to claim just because they are paying premium, right? As simple as that. But yeah, that's where everything is done from my end. That's all I had to say. I see Gopal Krishna has raised a question. I'll just. So, how do you want to take questions? Do you want to? Uh, okay, I see question and answer. Yeah. Um, so, I'll take go in the order only. So, Abhidab Chube asked how I fixed my coverage amount. For that, typically what we would suggest is that, calculate your human life value and see what your remaining gap is coming out to be. What is the remaining gap? You simply buy that as a term insurance, right? Let me know if that's not what you were trying to ask, right? Then Ritishri Bairwan asks, is there any insurance company or any other policy which will provide you the insurance after the disease got detected? Suppose cancer got detected, and then if we'll want to take an insurance. Cancer, for that matter, no one will give you after you have detected. In the entire market out there is just one policy by Star for a cancer survivor that also doesn't cover cancer relapse. So many a times people complain that so like we have had cases where say someone had an accident and it did damage to their skull. Now they're all fit and fine, etc. But because of that severe thing, right? The medical underwriters at the insurer feel that tomorrow, because there's an issue in skull, right? It can trickle down to any part of brain and then it can trickle down to any part of central nervous system and any part of body. So they'll say you are outright rejected. But these guys are like यार मुझे कैंसर ही हुआ है ना बाकी सब तो ठीक है मेरे लिए मुझे यही हुआ है ना बाकी सब तो ठीक है so there are some policies which do cover if something is detected even after some time, but it will come with some secluded permanent exclusion on a certain part of your body, right? But you still get covered, but that's not the ideal cover you want to have. So if you're fit and fine, better to have one because in all these coverages, right, there's a 20% copay, 30% copay, where if the hospital bill is 100 rupees, 20-30 rupees you have to pay out of your own pocket. So that's not the ideal way to do it. Uh, uh, Key points to so just a second. So Gopal's question was answered. Right age. Recording will give one. Anil Kumar asks key points to choose and pick term insurance. So term insurance, you just have to answer three questions. How much should I buy? Which insurer should I buy, which depends on the claim settlement ratio, the solvency ratios, and which parentage they belong to. We can always get on a one-on-one call to discuss what's the policies that we suggest, right? And third point is which policy metrics to choose. In the sense 60 years तक लो, 85 years तक लो, 90 years तक लो, 70 years तक लो, and along with that, how much years should I keep paying premiums? Limited pay, regular pay. Those are the key points for term insurance, right? Mohammad Siraj asks, okay, can we get health insurance for diabetic patient without waiting period? So, diabetes, yes. There is Care Health, which allows you to. There is HDFC, which allows you to. They have a couple of plans where you can pay some extra premium and get the diabetes waiting period waived off. So, yeah, there's an option for diabetes out there. Uh, yeah, this is that. Any more question? Shubham asks, from where we can get human life value calculation Excel sheet? The Pascal team will share the link with you, the Excel with you, along like post the end of workshop. Uh, any other questions? I have a 3 crore policy. So Gopal Krishna asks, I have a 3 crore policy with critical illness rider of 20 lakhs up to 75 years of age. Now I plan to buy a health insurance. How much is good coverage? Gopal, can you also write your age in the chat? 30, perfect. That. So, like I said, right? So, imagine medical inflation is 14%, right? So, say by the age of, um, you know, say from 30 to 36, the yeah, from 30 to 36, the say the average. So 5 years down the line, I'll tell say 10 lakhs के बोले 20 lakhs रखो. 10 years down the line, I'll tell 20 lakhs के बोले 40 lakhs रखो. 15 years down the line, I'll say 40 lakhs के बोले 80 lakhs coverage रखो. And say 25 years down the line, I'll say keep about 1.5 2 crores of coverage, right? Because that's how the medical inflation is already are. Obviously, 15 years down the line, if medical inflation goes down to 8%, 10%, you will have to reassess that, right? Now, the question that is always there between us, right? That if I buy a 10 lakh coverage, it will take care of my healthcare expenditure today, but not tomorrow. So, the question that is, if I buy a 10 lakh coverage today, right? And, at the age of 40, I again ask that, I need, say, now I want to make my life health insurance coverage, say 25 lakhs. Will the health insurance give me? The answer is yes, but subject to fresh medical underwriting. So imagine at the age of 40, you go to your existing insurance, say, "Here, make my 10 lakhs, 25 lakhs," and they come to know, hey, you already have cancer, they will not allow you. So at that time, you will then have to settle with the 10 lakh cover that you have. So which is why what we suggest is that you can always, so all these health insurance premiums also, right? Always whenever you are asking for quotes or whenever you're buying something, right? What you can also consider is key, what is the premium for 10 lakhs? What is the premium for 50 lakhs? Now, if you'll see, right, the first 10 lakhs for a 30-year-old may cost about 15, 18,000. But the next 40 lakhs, that is from 10 lakhs to 50 lakhs for a coverage, will cost only additional 5, 6,000. Why? Because the insurer also knows that today the likeliness of you claiming more than 10 lakhs is very less, which is why the incremental sum insured is cheaply priced, right? So the most peace of mind person, like if you want the highest peace of mind, the ideal thing that you should do is buy a crore coverage or 50 lakh 1 crore coverage today itself, because you're not going to shell more than 4,000 5,000 rupees. But if you don't have even a 10 lakh cover, you don't have enough even to take care of things today. So the ideal first priority, take a 1 crore coverage. But if you don't take a 1 crore health insurance coverage, at least take 10 lakhs. And then eventually in future you can top it up, right? Um, all right. Deepak says good session. Thank you very much. Uh, then Venkatesh asks, insurance companies are keeping on hold for 6 months when applied with chronic diseases. What are the chances to get term insurance for issue after the holding period? So I'll tell you, right? So whenever I think if you have experienced this case, right? So, in life insurance typically give you two kind of underwriting outcomes or three kinds. One is accept, second, and within that accept it could be with a loading or without a loading. Second could be rejecting you, saying that you are a permanent decline. कभी भी आप आओगे हम आपको तो reject ही करेंगे. Third is they call it as a postponement case, where they say is ki, currently we are not willing, currently we are not willing to accept you, but tomorrow if we are willing to accept you, you can try 6 months down the line, right? So every time you apply, they'll say 6 months postpone because for the longest time, diabetics people are not getting allowed, right? And the life insurance, their hands are also tied up because they are also getting reinsured at the back end, say from Ministries, Visit, the international giants, right? So unless they allow diabetic people to be covered, it's unlikely that you will be covered. Having said that, if the chronic disease that you mentioned, Venkatesh, is of diabetes, lately Bajaj has launched a plan where diabetics are also covered, Bajaj life insurance. So we can check out that for you when you need. Uh, Anil Kumar asks, being a 35-year-old, opting for a 1 crore coverage can up to choose considering present health span. Uh, Anil, your question is about health insurance, right? Term insurance. Okay. Can you rephrase your question? Being 35 years, opting for a 1 crore coverage can. So, you are asking till what age should you have one? Like, what should be the maturity age? Due age maturity, right? Yeah. So, in age maturity, right, I like to take extreme views. All right. So, one is you don't. So, no. Sorry, my bad. Maybe the need for insurance is clear, right? Uh, anyway, so from a term insurance point of view, right? Like I said, right? Ideally, conventional wisdom says that anyone needs a health life insurance only until their income earning years. Now, I'm not sure if people out here have done their financial planning or not, doing when they can retire, etc. Right? But let's say even if you can't, well, if the money is not enough to early retire, your retirement age will be 60, right? So what I typically suggest people is that you can take a 60 or a 65 years maturity age. Now, what ends up happening, we Indians have a typical mindset towards it, and nothing wrong with it, right? कि 60 तक प्रीमियम पे किया, 60 तक मरे नहीं तो सारा प्रीमियम तो वेस्ट चला गया, right? Like, while there is a noble cause way of looking at it. So which is why the endowment policies, ULIP policies, they do well in India, right? कि insurance भी investment भी, but the insurance is namesakes very less, right? So what do we suggest is कि the life insurance term plans, they give you maturity age until 85 years and then until the age of 100. So we had done some maths around it. So what we typically suggest people is, say India mein life expectancy is 69 for males and 71 for female. So if you take a 85-year policy, right, and say you're 30, 35, no matter what your starting age is today, right? If you take a policy until 85 years of age, and keeping the emotions aside, financially the worst case is that you pay all the premium, then you die on the last year, 85. If the ultimate worst case is you do die on the 86 years, but say if we take 85, it's like 100% probability period कि 85 का maturity age लिया ना, तो 85 के पहले तो we'll end up dying, right? So if we take a 85-year maturity policy and the payout comes on the 85th year, my premiums will still compound at 7.5% if I'm a non-smoker, because smoker के premiums ज़्यादा होते हैं. So we say to people who don't like shorter term maturity policy, right? या तो 85 का लो या तो 60 का लो. 70-75 is utter nonsense because जरूरत ही क्या है, मतलब 70 में you are not even maximizing your probability of a payout. Neither you need the coverage from 60 to 70 years of age. So you're like, either take until 60-65 years of age or take 85 years of age. 70-75, in our opinion, is it's somewhere in between, which is not required. So yeah, that's the suggestion. If you're looking it from a guaranteed money back point of view, then take an 85-year policy. The money still comes back to you uh, at 7.5% return, tax free, right? Uh, ये हो गया. Eh, with Venkatesh asks, with continuation to my previous earlier question, chronic disease like IBD. To check what is IBD. Sorry, inflammatory bowel disease. Not too sure. We'll have to keep checking with the insurers. You know, well, your best bet is keep trying with the insurers. Like, you can try with all these 3, 4 insurance. The basket team can help you. You can book a call with us and we can take care of the application. But yeah, try with 3, 4 insurance and it will come. So typically the thing is, um, so I'll tell you, right? ICICI Prudential and Bajaj Life both have um, Swiss Re at the back end. So if both है Swiss Re at the back end, अगर बजाज में नहीं होता ICICI में भी नहीं होगा, हमने को पता है, ठीक है. So typically do that and always try with lower sum insured like 50 lakhs 1 crore so that it may sometimes so happen, nothing set out in stone. It may sometimes so happen that you may not get a 5 crore cover, but you may get a 50 lakh crore or 1 crore cover, right? Something like that. But yeah, we'll have to look at it at a case to case basis. Anything else? One new message. Gopal Krishna asks, currently I have a Max Life term insurance. If what if in next 20 years, if Max Life bankrupts and goes out of business, what will happen to my insurance, right? So this is the point that we take care in the individual advisory, but I'll initially give you the right. So in the choice of insurer thing, right? I told you, right? Three things: claim settlement ratio, the corporate group it belongs to, and third is the solvency ratio. Okay. Now Max Life belongs to Max Financial Services. Now Max Financial Services, owned by Analjit Singh, is a guy in Delhi. He has Max Healthcare, which is the hospital. He had Max Health Insurance, Max Bupa Health Insurance, which he sold his stake to a PE fund, and now it's called a Niva Bupa. So he no longer holds. He also tried to sell Max Life Insurance twice to HDFC Life, but the IRDA did not allow it. This was like 5, 6 years back. And now Max Life may Axis Bank is slowly and steadily trying to increase its stake. Like I think currently Axis Bank holds some 23% stakes in Max Life Insurance. So he's trying to sell out that business, right? Now, Max Life typically did not used to be our like top of the funnel suggestion. Why? Because Max Life के ऊपर Max Financial Services जिनका नेटवर्क इतना कुछ ज्यादा नहीं है, unlike say HDFC Life or Bajaj or an ICICI, right? So what we used to say is that Max is good now because Axis is coming into the picture, but we can take off look that way. Having said that, what if it's not Max Life and it's one of the most smallest insurer around it? Say for example, there was something called as Exide Life Insurance. It was owned by the same guys, the battery guys. It got sold to HDFC. Then there is India First Insurer, and there are 3, 4 other small. That is Aegon Life. Take a very small uh, insurance companies. What the IRT does to protect you is that any insurer, right, they have to maintain 150% as solvency ratio. तो अगर उनके पास उनका total life insurance is 100 rupees, they have to maintain 150 rupees as assets. What this helps you is that even if tomorrow and the moment it goes below 150%, right? So basically they are supposed to have more than 1.5 times their liabilities. Even if it goes below 1.5 times, right? IIT says now you cannot issue any more life insurance policy unless you increase your solvency ratio. So you are always so you will never face an issue of bankruptcy in life insurance thanks to what IRDA does. And mind you, insurance companies have separate accounting guidelines. They do not the frauds like Satyam cannot happen with insurance companies because they a lot of their valuation rules are mark to market. So those kinds are not really possible. But the IRDA protects you by the fact saying that कि अगर 150% के नीचे गया तो वो नया पॉलिसी इशू नहीं कर पाएगा. So as on date when they stop issuing new policies, you are already covered with a 50% buffer, right? So any insurer will just take over that insurance firm and you are secure. So risk come hai, but we try to say कि why depend on someone else taking over that insurer, right? For example, Reliance Nippon Life में हुआ था. Reliance did not have money to infuse. But thankfully, Nippon from Japan had, so Nippon infused some money in Reliance and it again started issuing policies. But yeah, that's for you, Gopal. Yeah. All right. If there are no more questions, ठीक है. I think we are good through.
Awesome. Thank you so much, Vatsal. That was a high intense, a very knowledge packed session. And thank you so much for taking part here. Everybody joining in. Thank you for also taking the time on a Friday to come in and listen to us. We have the link on the chat for anybody who would like to have an extended session with Vatsal. It is on everybody. I'm going to again put the link on the chat so you guys have it. You can block time 1 month. The July blocks, I think we're blocked till 9th of July or something. Probably you'll find dates on that calendar that is convenient to you. Please find some date and you can maybe book a consultation with Vatsal and see and find your financial freedom. Thank you all for tuning in for another workshop. This was our fifth workshop in the last 4 months. So I guess we're doing a good job. I hope so. My boss will tell me, and Vatsal will definitely let me know at the end of the session. Thank you all for joining in. Have a brilliant weekend ahead. And Vatsal, thank you so much. I hope you get some water later.
Thanks, awesome. Yeah. Thank you so much. All right,
Thank
guys. Bye bye.